Hey Lance, so how's it going?
Right.
Let's talk about this new strategy you've been working on with Theta
Hi,
Trader.
Hi, Russell. How you doing? So I just want to do a quick view overview of the zero DTE strategy we've been doing at ThetaTraders. I was back testing it quite a bit in middle of 2021, and we actually started it out around early October 2021
Right.
into right now it's February 10th, 2022, and had a
Mm.
few hiccups in the beginning, but we actually had a pretty good rate in 2021, had about an 84% success rate. And currently this year, even though it's been a very volatile market, we're at a very good rate right now at, you look at these actual numbers, 94% success rate. So it's going very well for 2022.
Very cool. Um, yeah, so have you got anything to share on your screen or because
Yeah,
I
let
don't
me
see
set
anything.
that up.
I just realized that um because these
Oh,
last
you
few
got
months
it.
have been hard. These last few months, people have been blowing up their accounts on their own trades and other services. So it's pretty cool to see that you're still being consistent with this one.
Right. You got to share the screen. It says host disabled.
Yeah, I keep having this issue. I've been using Zoom more. So advanced sharing options. We can
Allow
share all
multiple.
participants. There. We can start sharing with them as all participants. Multiple. Okay, so you should be able to share it now. It should come up.
Okay.
All
All
right.
right. So if you
Well,
look here, this is the Google sheet that anyone in Theta Traders could see all the data. It shows the back testing, the date that we actually did the trade. And you could trade this on Monday, Wednesday, and Friday, 3 days a week. They're soon going to possibly allow every day of the week. I think they're working on that. And the SEC is trying to approve that for the summer. So that could be interesting. You could actually do this trade every day of the week if you'd like. On the second column, I write down if we're doing a put credit spread. It's
yeah.
essentially when you're selling a put at a certain strike and then buying a put, usually five strikes below it. You guys do a call credit spread or an IC is an iron condor, where you combine both the put and the call credit spread. A little later, I'll discuss why we choose one over the other here. You can see the stock price when the trade was entered. Typically, we enter the trade around 10 to 15 minutes after market open, so we could determine where the trend of the market is at the time.
Right.
These show the strike prices that we implemented. And if you just take a quick glance at current stock price to the strike prices, we tend to go really far away from the current price, especially with volatility being very high in January and early February. We want to have a good cushion and still have a high probability of success. So we're looking at, sometimes 10 to 15 points off the stock price, give us a nice little buffer to possibly get a good return on it. The
The
next
delta's small.
Yeah, we look for low deltas because we want high probability, a lot of small wins really
Right.
add up. It's like a baseball team. You keep getting a lot of base hits,
Right.
suddenly your bases are loaded and then you could get a lot of runs, right?
Right.
So we typically look around 0.05 to zero point zero 0.08 delta or so, give or take. And if you can see, every one this year was from 0.05 was the lowest to zero point zero 0.08 was the highest. I like to look at the VIX because that's a good measure of volatility to see approximately how much S&P will move in that particular day. In general, the VIX has been pretty elevated. If you look at middle of January, we're in the 20s. It actually shot up to 37 at one point,
Yikes.
and we hit the 30s and high 20s for most of end of January and early February. So by doing that, the premiums for these low deltas are relatively high. These are for 5 whiff strikes. So what that means is you're only going to need to put up $500 in buying power. For
Right.
instance, if I sold a 450 put option and then bought a 445 put option, the max loss would be $500. So that's all you have to put up in your brokerage.
That's
And then
cool.
for the day, you could receive $17, which again doesn't sound like a ton of money, but when you do the math of it, 17 divided by 500, you're looking at 3.4% for just the day, right?
Yeah, that's nice. Yeah. Um, Pretty cool. For new people that are getting into this type of style of trading, I think it would be pretty awesome.
Yep, and as I teach in the member area, it's all a numbers game. It's all about the probabilities. I said you need about a 70% win rate to get a positive long-term outcome. We don't let these go to a max loss, so you're never actually going to lose the $500.
Right.
We set stop losses typically at 3x the premium received. So let's say we made $20 when we entered the trade. We'll typically do a stop loss at 3 times that, or $60. If it happens to hit the stop loss, then you would actually lose 40 because you took in 20 and
Right.
then bought it back for 60. Okay? So typically your max risk in any one position might be between $60 to $80. And we're looking to gain between $10 to $25 in any one position. Yep.
Right. Right. That's pretty good. So you could scale that up if you've got a bit of a higher risk tolerance and a bit more money. You could do 5,000 or 50,000.
Yeah,
Imagine doing 50,000.
there are some people doing more than one contract. I just looked at the data for one contract just to keep it as a baseline measure there, but there are some members that will do this with multiple contracts. I did write a pretty detailed article on money management as well. I give recommendations on approximately how much of your total account you should be doing this with. I wouldn't recommend doing this with 100% of your account. You're going to need a lot of Pepto-Bismol for some of the days.
Yeah. So
But
how long how long are these trades roughly lasting? I saw a few of them, but I haven't been following every one.
so these enter on the same the same day that they're going to expire. So this was like a Monday, Wednesday, Friday.
Right.
Again, we tend to enter them about 10 to 15 minutes after market open.
Mhm.
In many cases, we might just let them go all the way to expiration. And then in the end of the day, you would be able to get your profit. So here are the outcomes. You can see if it just says win, we just let those go to expiration
Oh wow.
because the S&P wasn't anywhere close to where our strike prices were, and we're able to collect the full premium receipts. Now, some of the trades, especially with the higher VIX, when it was much more elevated, we decided to buy to close these at a pretty significantly lower than what we entered them with,
Yeah.
because we wanted to just guarantee the win. If you could see here, we guaranteed a 2.74% win, guaranteed a 2% win, 2%. And typically, if you can get 1.5 to 2.5% by lunchtime, I think it's usually a good idea there.
Pretty cool. It's pretty cool. So yeah, so people can expect to be in them for maybe the whole day. Like, would you say that's the main, like, I guess the numbers tell us are you holding mainly till the end of the day, or is it
Yeah.
yeah, so the whole day.
If the VIX is not super elevated, if it's not in the 30s, typically, if it's at 20 like it was on Wednesday, we just let it go all the way. Once VIX is elevated, there is a bigger chance for the SPY to move quite a bit in that particular day. So that's when we want to take those profits.
Yeah, so I'm just trying to figure out like whether I could enter on this stuff and then just go and not be too stressed if I'm not at my computer, for example, knowing that there's a good chance that not much exciting stuff will be happening in terms of like horrendous losses. So like I guess I could keep an eye on it intermittently for over a few hours and just keep watch on the Discord for updates or whatever.
Right. There are some other channels that will do this strategy, but they usually tend to go much higher deltas. They could go 0.15, 0.2 delta. And you have to be on that. You got to be watching like every second, because any small change could be a dramatic difference in your prices.
So that's what's protecting you with all the crazy volatility recently, right? That's probably because I'm like sitting here going, really, people are doing this and like in this market and it's working, but it's why, right? Because you're doing a low delta. Is that one of the reasons?
Right. And also with that low delta, you don't have to be on your computer every second of the day. It is helpful to check the market a few times during the day if possible. I do send out alerts when you could buy to close these at a lower rate. So quite a few members, it's lunchtime. They sold it for $25. They can buy it back for 10. They made their $15 for the day and then they're good. and that's
Yeah.
per contract, of course. So yeah, it's really up to the trader at that point, but I do give a possible buy to close if they'd like it.
Yeah, and everybody can do like what they want if they're happy with it, they just take it. And I've been doing that a lot recently with alerts, not in Theta but other stuff. I'm just like, I'm gonna be busy. I've got a profit. I'm leaving. I'm taking it off. I won't have to worry about it. So it seems like that could be kind of this scenario as well.
Right.
Sort of things. So.
So I wanted to show how these small wins will add up. These are the percent gains per day. There was only one blank, and that was on the 5th of January. This was the only one that we actually hit the stop loss. And it wasn't a really big loss because we took in $10, we lost $30. So it's only a $20 loss plus commissions, talking about $24 or so. But every other one, you could see that there's a percent gain because these were all winners. After that one loss, we were 1 for 2. And then we just keep adding a number in each numerator and denominator. And for the year, we're currently at 15 over 16.
That's awesome. Nice.
It ends up being 94% when you divide those numbers out.
That's ridiculously good. And like I like this because like a lot of people are getting so stressed out with trading because they're all trying to, double their accounts or add 20% a week or whatever. Like this is, I mean, even with just $500, this is lunch money. I mean, it's great. Like it's income, it's passive income almost. Like it's very low work income. And like what's the worst that happens? You lose $300 or something out of the 500. The best thing that happens is you make 20, $30 every other day.
Yeah. And again, soon, every day, shortly, probably.
Yeah. And then just keep adding more contracts if you're liking the strategy. So
the last column right here, I show what the profit is. If you started with just one contract, so $500, one position. Obviously, if you took a gain one day, the first day we're up to 509. Second day was the loss. We're actually slightly below 500 for just one day this year, and only what 1450. Not gonna fall. Not gonna lose much sleep on that one.
no,
But then, as you can see, these little small wins every day really does build up the account quite a bit, because we're already at not even a month and a half, and 500 turned into 670.40. That includes commissions. I want to make sure we're as transparent as we can be. So I use Thinkorswim. I count the 65 cents per every commission for options that we do. So that's actual numbers that we received for 500.
That's cool, because I saw there was a question in the group where somebody was asking brokerages like Webull or Thinkorswim or what the differences really are. So I guess you mentioned the Thinkorswims.
Yeah, so let me open up the Thinkorswim. Can you see the chart up here?
Yep.
All right, so I use Thinkorswim because their charting is top notch. It's like one of the best I've found. You could also do a lot of different indicators. I'm just going to briefly talk about some of those indicators. So you might see all these big clouds and lines forms. This is called the Ichimoku clouds.
Yeah. Have you been using that? Yeah, I learned it recently. I'd heard of it vaguely over the years, but I actually bought a book from Kiana Daniel called Ichimoku Secrets or something and went through that. So I'm fairly new to it, but I know the principles of breaking out above the cloud and stuff. It's pretty cool.
Yeah. So this was SPY today, and this is February 10th. It was a pretty low day, negative 1.8%. It is a Thursday, so we didn't actually trade this today, but you could see at market open, actually, it started around here. It was a pretty big gap at open. When we went down almost 1.5% right away.
Yep.
It actually shot up quite a bit after the inflation numbers came out.
Right.
And then it just dropped again. So it's pretty big of a roller coaster ride. The VIX for most of the day was in the mid 20s, which is showing that there's a bit of volatility possible there. So this would have been a pretty hard day to trade on. There's a chance we probably would have got stopped out at it when it went from 150 to 158 or so.
Yeah.
But the Ichimoku clouds, essentially after this, you can see the lines trending downward. At around noon, it was below the cloud, and that's usually not a good short-term sign, and it just continued to fall at that point. So that's one of the things I do consider, looking at the cloud formation to see what possible trends might be in play. And then we also wait about 10-15 minutes to see if those conditions are still happening when the market opens.
That's cool. I didn't know you used the, is it Iki or Ichimoku?
Oh, yeah, don't correct me on that. I don't know if I don't want to upset the Japanese.
Yeah, yeah.
Now, there's a few others that I use as well. Sometimes I use this more for debit spreads, but this does show different trends if there's going to be a dramatic move in the market. So as you can see here, right before market close, there was a very wide blue band here. Those are the Keltner channels. Essentially, I'm sorry, those are the Bollinger Bands. The purple are the Keltner channels. When the Bollinger Bands are this wide, it's showing that there's a possibility for a lot of volatility. And this came out right after the CPI data came out for inflation. So we tend to look at the width of these bands. If it's getting more narrow, like here, this was on Wednesday, which we had a successful day on. It was pretty reasonable to go on a 0.05 delta on this day. But when you see a very wide one like this, if we already made a profit, that's usually a good time to possibly get out of it because there's much uncertainty in the market, or we could possibly wait until these bands lowered a little bit. Another one to look at is the RSI. This is a quick momentum indicator to see what the stock price was at whatever moment of time. If we're on a 15-minute chart, it's essentially taking approximate averages of the last, I forgot the exact number, something like 10 or 20 data sets. Yeah. If you can see this line increasing over time, if it's trending upward in the slope, then usually the SPY will continue moving in that direction, at least for that particular day. So we tend to look at market open. If you see the line sloping upward, we tend to think that it's going to continue going in that direction. So we would only, let's say it's sloping upward, we're going to go with a put credit spread because we don't think it's going to drop dramatically lower.
Right.
And then you could go the opposite way as well. If you see the slope downward here, there's a good chance that the market's going to decrease with it. And then you're going to bet a call credit spread because we don't think it's going to mean revert and change dramatically. So that's why certain days we might only do a call credit spread. Some days we might only do a put credit spread. If these lines are pretty much inconclusive about horizontal, relatively low bands, very low VIX, then we'll do an iron condor. You might sell a put credit spread here and then a call credit spread here. Again, very far off from the stock price to make it relatively safe. Yep. And then we just get happy with our 2.5% a day.
I love it. I love it. I'm going to have to start playing it a lot more, I think. So yeah, that's pretty cool. The cool thing is it's not the only thing you do. Like some services, that's all they would do, and they would charge $50 or $100 a month or something. But the cool thing is you just keep on piling on the value. So that's just an extra thing in the ThetaTraders.
Yeah, site. So some members like the very quick, get your 2% in one day, and it's all a numbers game. There's going to be a few losses here and there, but over time, the trend should show a good positive expectancy. And there's others, me included, to be honest. I will do these trades, but I usually only do 1 or 2 contracts. I'm more of a longer term, 30, 45 days out, looking for very high probability trades where there's a good chance that I could make anywhere between 3 to 5% a month. And I'm happy with that return. I don't have to lose sleep over worrying intraday what happens in the stock market.
I think with everybody getting busy again, so the last couple of years, saw this influx of day trading, people working at home and things, and everybody's been going back to work over the last year or 6 months, and this strategy would be perfect, right? So if you did 3 times a week, you did $500, tiny amount, you could make probably 50 to $100 a week, probably.
Yeah, if you're successful all 3 times, we average around 15 to 25 per day. So yeah, you can make $50 a week.
Yeah, so then if you do that times 4, it's like 200 or something, right? Well, the membership for Theta is at like 150 for 3 months. So there's a lot of leeway there to make profit on the membership just from those and from the trades. Now, if you were to then scale up your trades, you're starting to talk pretty easy profitability.
Yep.
compared to a lot of services that will charge you $1,500 up front and then just do a bunch of day trading scalps or something that you can't keep up with or whatever. Like Theta is different in that it's more steady. Like the probabilities are much higher and it's more steady and consistent, which is something I really love. So
Yeah, we have a lot of new members that are just learning this, and I want to be more of a teacher than anything else in this membership, just to show people how, if they want to, they could eventually do this stuff on their own. And we do have some people doing 1-2 contracts, 500 or 1,000 bucks in buying power that they're using up, and they're able to pay for the membership just off that. So then they're not only getting that experience, and then they could see all these different options, so to speak, on pun intended there.
use the fun, yeah.
How it might help.
Yeah, no, I love it because there's always this thing when people sign up for stuff, they're like, oh, well, you know, I hit this guy's winning trade, but then he took a huge loser, and then, you know, and they're never quite sure. But your math is really solid there, and you've back tested it, you know, significantly, and it's like, you know, the risk reward, and it's unlikely that they're going to join and lose money from what I can see and from my experience with this. So,
And I agree.
so it's pretty cool. So, how about, so let's just have a couple words about what else you do, because the crazy thing is that's like one of the things, like you do all your CSPs as well, which people are joining. It's another way they can do it. Just do a 1 CSP a day at the end of the, you know, for the next morning or whatever too.
Right.
It's
So
another
so the main focus on our membership is to look for credit spreads and cash secured puts where we're using Theta to our advantage. Theta is essentially how much an option will decay per day. And we want to be able to do high probability trades where the price of the stock is not going to hit our cash secured put or credit spread strike prices. And then we're just going to let the Theta decay every day. And then typically we might get out at 50% profit if it's a cash secured put. We tend to go a little bit higher if it's a credit spread. And credit spreads are good because they use a lot less buying power, especially for members with not large account sizes. You could get in $500 in many cases. We do also look for cash secured puts on relatively less expensive positions. I know some other members might be, you know, sending them on Facebook, Microsoft. Those could be $200-300 stocks. You got to multiply that by 100. You have to have pretty high buying power to sell those cash secured puts. In our case, we tend to look at credit spreads where you could still play these positions with $500, maybe $1,000. And we also look for smaller positions for cash secured puts, tend to be $5 to about $20 strike prices, which are pretty reasonable. Again, $5 strike, you could get one contract for $500 if you want to. And you could easily scale these up in multiple contracts if needed. So we do the 0 DTE 3 days a week, Monday, Wednesday, Friday. But then every trading day, including those days, we give at least 2 alerts on usually 1 cash secured put and usually 1 credit spread. I tend to try to find one of each that might be suited for different members. You know, some people like the more bigger, you know, tech stocks, blue chip type companies. And then we'll do a credit spread with those usually. So if those, we tend to go really far out of the money, look at those Ichimoku clouds, look at the different technical indicators to find a very high probability of success where it's not going to go lower than our strike price on a like put side, for instance. So if it stocks at say 100, we're going to possibly sell a cash secured put, credit spread maybe at 85, much lower than the price, because there's a very low probability it's going to touch there. And then we also send 1 cash secured put for, could be a higher implied volatility, tends to move around a little bit more, but a cheaper position where the technicals still look pretty advantageous on our side. And we tend to go for 85-90% success rate on our trades. Again, we're not hitting huge home runs here. You're not going to be getting 10% a day on these positions, but a lot of these base hits, you know, they add up quite a bit as long as you're being very consistent on it.
That's definitely what I've learned over the years is consistency is so much better. But a lot of people can't deal with consistency. They want the adrenaline rush of huge wins and things, but those people generally don't stick around very long, or they aren't overall profitable over a longer time period. So, a couple of questions. So one guy was asking, about buying to close these 0 DTE SPY trades. He's asking if there's any guidance on ways to limit the buying to close, because it could eat away at the profits very quickly if you don't,
Yeah.
like figure out a good way.
That's true. I did touch on it a little bit in the beginning. When the VIX was elevated, we were able to receive more in premium for those days anyway.
Yeah.
So I would rather just take the guaranteed win once you hit at least 1.5% of return for the day. And then you will have to buy to close it. That could be an extra $1, which is a pretty high percent if you're only making $15 to pay an extra $1, which I do agree with. But I'd rather take the guaranteed win when the VIX is elevated. When the VIX is a bit lower, in the high teens or so, you might only be starting the position at $12 to $15, especially if you're only doing put credit spread or call credit spread. In those cases, we usually just let it go the whole day because it's a larger percent of our return.
Yeah.
So that's essentially depends on the day. I think it's best to think about what's happening with the market and act appropriately with it, even though commissions could definitely add up.
Yeah, I think we also talked about his other part of his question, which was any thoughts on ways to tweak the stop loss, something less than 3x premium on a trailing stop. I think we pretty much covered that, right?
Yeah, when I saw in the back testing, first in the middle of 2021, the 3x stop was working very well, where you wouldn't get stopped out a lot. You would still be in a possible position, and then the market just stays essentially where you are. You might be near the 2x stop, but it doesn't get to the 3x stop, and then you received your full premium. It is a fine balance. If you don't like huge losses, you could go with the 2x stop, but you're going to get stopped out more. And there's not necessarily saying 3x is clearly better than the 2x, but I just found based on my back testing that it's a good balance between staying in a possible winning position and not getting a huge loss. The one thing that you definitely don't want to do is hit the max loss, which could be the full $500 on one contract, because that would ruin the position if you're only making $15 to $20 a day. You can't take the $500 loss.
Yeah, it'd be pretty painful. So his final thing was about Webull, and I guess that comes down to this whole question of avoiding fees. When you're doing a $500 thing, you're right, you don't want to be getting hit with $2, $3, $4 fees because that's a huge, part of your profit. So Webull I used, I think, a year ago, and I don't think they had any fees associated with selling any of this.
Yeah, for buying and selling options, I think it's free.
Yeah.
And their interface is pretty good. But I have heard, I can't prove it, but I have heard that the fills might be a little off, where on Thinkorswim, you might receive $12 when you place that limit order, but on Webull, you might receive $11. Like, it doesn't sound dramatic, but that would be the commissions anyway. So it is something to consider if you are caring about fees. Try Webull, Robinhood. The main thing that I don't like about them is you can't do it in a Roth IRA because they don't offer Roth IRAs. And Thinkorswim does. So that's the main reason. Also, I really love Thinkorswim in general as a platform. I mean, it pretty much has anything you could want in there. There's still more layers to that onion. Like, there's still more I could do, especially like setting up programs and scripts. But for what I've seen so far, I'm very happy with everything I've had.
Yeah.
So.
Yeah, I love Thinkorswim, and it's crazy. I didn't start with Thinkorswim until like a year ago. I never even touched them. I'd used all the other brokers, never even thought to use Thinkorswim, and I missed out. It's a good platform. It's powerful and it's easy to use. So yeah, so that's what I've been using for pretty much everything. So yeah, so I guess the bottom line is people watching this come and join ThetaTraders. Come and join. I think it's $150 for 3 months now. Like we're saying, $500 position 3 times a week. You'll cover that cost no problem at all. Probably triple it or something,
Yep. And we also offer a 14-day free trial. You could easily sign up, try it out. You might be able to receive about a month premium, about a month fee just from the trial, possibly. And definitely here for teaching. So if anyone has any questions, feel free to join that free trial. Send me a DM, and as you can see, I'm pretty busy and occupied on the Discord, so here to help.
Yeah, that's what I always tell people. If you're looking to learn this stuff, go and join Lance, because he's like you give more value than pretty much anybody else that I've been working with in terms of just like your time and helpfulness and stuff. So I love working with you because of that. It's just like it's amazing because people really get value.
Yep.
So it's really good. So yeah. So we'll leave a link in the description. I think we're gonna post this on your channel and on my channel, and we'll link to Theta, and hopefully you guys can join us and get some good trades in.
Sounds good. Either my channel or Russell's channel. If you leave a comment on either of the videos, we'll make sure to watch them. We'll respond to them as needed. Okay.
Yeah, sounds good. Well, thanks for sitting down and talking about it, and you've convinced me to start joining a bit more with the SPY trades. So be good.
All right.
Okay. Sounds good. I'll catch up with you soon. All right, cheers, man.